Good afternoon, ladies and gentlemen. Welcome to the Parsley Box Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll, and if you give that your kind attention, I'm sure the company will be most grateful. I'd now like to hand over to CEO Kevin Doran. Good afternoon.
Thanks. Thank you. So welcome to our H1 2022 interim results. I've got Holly McComb, our CFO, and myself, Kevin Doran. I'll run through the presentation, and as you said, we're happy to take some questions at the end. So just to remind everybody, the purpose of Parsley Box. Parsley Box is a business that's focused exclusively on the 65 plus demographic. We've worked hard over the last 12 months to update our brand, our packaging, and our product range. We'll talk through that around the presentation. But I'll hand over first to Holly to run through some of the financial metrics, and we'll move on from there.
Hi everyone. So our first half of the year revenue was 9.6 million, and that was 30% down on this time last year. We've had a real change of focus within the business. So we are very much focused on our repeat customer cohort at the moment. That delivers us higher margins. And our real focus now has moved from a business that is growing top line at any cost to one that is really, really focused on its profitability. So all our metrics now, you will have seen previously a lot of revenue-based metrics. We still have, and we'll present those, but we'll also be showing a lot about our margins and our journey towards profitability. So in that vein, you can see that our losses for the first half are 2.1 million. So that was 42% less than the prior year. So we've made really good progress on that journey of becoming a profitable business. The big part of our spend has always been our marketing activity. And you can see in the first half, we spent 2.3 million on marketing. That's down from 5 million the first half last year. And we said at the start of the year, be running our marketing spend around about the 25% of revenue level. We did 24% for the first half of the year. That will be a little bit higher in the second half of the year. And from the balance sheet perspective, last year you did hear that we were reporting we did have quite considerable supply chain issues in the second half of the last year, but those are fortunately behind us and we have rebuilt our stock levels. We had 1.2 million of inventory at the end of June, and that's 47 days worth of stock. And we have continued to build that stock in preparation for the winter period. So winter has been traditionally busier for us. And also the buying ahead, we can touch on later, but the buying ahead is really allowing us to manage the inflationary pressure that we're seeing in the supply chain. So we're now very well stocked as we head into our busier time. So in the top left-hand side there, you can see the trend of our average order values. These have been increasing well period on period since the start of Parsley Box. You can see new customer average order size increased to £26 in the first half, and the repeat customer increased up to £49. And because of that mix of between repeat and new customers, overall our average order value was £45, which has shown a really good increase. What is happening, and you'll see it across the market with businesses like us, that the CPAs or the marketing costs per order have been increasing. So that's what that chart on the top right is showing. So managing those increased costs per order is something that the business focuses on every day of the week. So balancing how many customers we can afford to acquire versus how much we spend on maintaining our customer base is a dial that we are continually judging. and how we can best deploy that acquisition spend between channels to try and minimize that CPA is something that's continually evolving, and we can touch on later about which channels we're now seeing are delivering not just a lower cost per order at the point of acquisition, but really it's which channels go on to deliver as repeat ordering customers and the highest lifetime value customers that the business is really focused on. Our active customer base has fallen since the end of the pandemic. We still have a strong base of the 145,000 active customers, and it's that group that we are able to focus our repeat marketing on, as our new product range is developing, as we're bringing out the membership scheme, etc., it's that group of customers that are actively taking up these new products and services. As I said, the mix of the revenues really changed. In the first half, we were 90% repeat, 9% new customer base. And because of that, repeat customers, they tend to buy at full retail prices. They don't come in on an attractive discount like a new customer does. And that's how you can see that those product margins have grown really well since 2021 and up at 54% for the first half of the year. And in turn, that's helped drive our gross margins levels to 31, which is the best yet for the business. We're also building a lot more efficiencies into our order fulfillment processes, which is supporting that growth in gross margins. For example, we've been changing our carrier. We used to always use DHL. We now use Royal Mail for part of our deliveries. We're going to be trialing other carriers in the fourth quarter to try and get that right balance of a cost and a customer experience. So we've been really, really disciplined on our marketing spend so that we can drive towards profitability. It's a careful balance because we've got to keep topping up that marketing channel, keep topping up our funnel with new customers, but the new customers who we believe will go on to be high lifetime value customers and help us work towards that profitability journey. So as you all know, the market out there has changed enormously in the last 18 months. The consumer behavior is changing continuously, and the business is managing its way through that. The inflationary environment is hitting from both food, for energy, packaging, labor. It's across the board, just like with all businesses out there. We're also seeing a tightening of credit terms in the market, largely from suppliers because of their energy bills. They don't get credit on the energy bill, so their working capital is also a bit tighter. So we're seeing that, and these are the very real challenges that businesses are having to face every day. We're not alone in having to manage with those. And with those as the backdrop, the focus on the profitability and managing that working capital is the core focus of the business. However, there are real positive parts to the current environment for us as well. Our product range plays really nicely into this type of market. It's a very, very low energy product for our customers. You don't need to store it in a fridge or a freezer, so there's no energy cost there. We deliver it to your door free if it's over £35. There's no fuel cost there. And particularly on the cost of cooking front, our competitors are frozen base, which are 40 minutes or so in an oven. Ours, as 2 minutes in the microwave to heat, is very, very energy efficient. Also, the long shelf life of the product means that we've been able to produce our product ahead of cost price increases, which is why you can see good stock levels being built. And our consumers also can hedge against those sorts of price rises. But because of those benefits, we've been able to go out with a really, really strong message in our latest advertising campaigns that we're able to freeze our retail price until 2023. So that's not something that many or any retailers are able to do until January. And that is the benefit that we can get from our product range with its long shelf life. We've done a lot of work this year to try and make sure that we can market and serve all the customers in our demographic. So for those who are on a slightly tighter income, we have introduced the everyday low price range. So that's a range of meals at the £2.95. And we're seeing a really good increase in volumes in that range over the last month or so since it's been launched. You'll also see, if you go onto our website, we are discontinuing some of our product ranges. So some of our product lines, not the main meals, we're going to continue expanding those ranges, but some of the peripheral items where we had a low margin, some of the drinks, for example, we are going to be discontinuing those so that we can focus our working capital on the high value, high margin and high volume products. I think that's common with all retailers. You'll see others sort of slimlining some of their selection process so that they can maintain their margins. Over to you, Kevin.
Great, thanks, Holly. So just to remind everybody the target market that we're addressing. So first of all, it's still a large and growing market. So over 12 million people over 65 in the UK. We really are currently focused on individual consumers. So typically reaching them offline, and we'll talk a little about marketing channels and the marketing mix and strategy in a couple of slides. Current database is around 640,000, so still very low penetration within that 12 million addressable market in the UK. But we also have seen some quite good early success in expanding into other peripheral markets, for example, within the NHS. So we launched a trial with Bath and Somerset NHS Trust earlier this year in terms of discharge packs, so providing patients with the ability to take 2 or 3 days worth of meals home, and we definitely have seen some expansion in that, and we are planning to invest in growing that part of the business, because as Holly said, the environment in terms of cost base, energy prices is not just affecting the consumer, it's affecting other businesses, for example, care homes, and we think there's a good opportunity to build a business-to-business sector of the business over the next couple of years, and we definitely will see some growth in that area. We've got a number of additions to our team in the second half to try and achieve that. We also do see that there's an opportunity of a sort of secondary audience within customers who are buying for relatives. So typically a younger consumer, around 17% currently of our purchases are made for somebody else within an additional household. So typically a child buying for their elderly parent. And we definitely think there's an opportunity to reach those through other online marketplaces and other online channels, which will give us an additional revenue stream going forward. So just to talk about our customer today, so our average age is 74, slightly younger than it was in the last 12 to 18 months, coming down from about 77. 60% of our customers live alone, 40% with a partner. Very even male and female split, 50-50. We've done a lot of research over the summer and focus groups, really looking and understanding more about our consumption occasions within our customer base, and we really are very well placed within the midweek occasion. So typically consuming 1 to 2 meals per week. And they really enjoy talking to our contact centre. We still see that as a real point of difference for us as a brand, to have that conversation. We want to drive a bit more efficiency from that. We want to drive some additional meal occasions from that. I'll talk about that a little bit later. But they really think that being able to speak to somebody, having the meals delivered to their door, is a real differentiator against any other retailer. And as I mentioned, around 70% of our customers aren't buying for themselves, but buying for relatives. So an area of expansion, both online, which you'll see within our tech team in the next 6 to 12 months, but also trying to identify them and find them through other marketing channels. So to talk through our marketing channels and how that's changed, I mean, there has been some challenges within this audience. I mean, we've had Royal Mail strikes, which we haven't had for a number of years. We have historically done a lot of mailing to customers. We've seen some delays in that. So we have, as Holly said, adapted that mix. We're moving back into TV, which we have been off air for probably 5-6 months. We've been retesting that over the summer, and we'll show you a new ad that we've just launched in the beginning of September. That's not just to try and find new customers, that's also to find a lower cost way of reaching our existing customers rather than having to mail them. Costs of paper have gone up, costs of mailing's gone up, the predictability of that. Some of those inflationary pressures are not just within our food supply chain, but within some of those marketing channels. So trying to look at ways of hedging against that and trying to make sure that we've got ways of reaching our audience. Definitely driving more into TV, and we definitely have seen that high lifetime value customers can be acquired through TV. Although their initial cost of acquisition is higher, they do tend to buy at full price, and they tend to actually repeat order at full price at a higher frequency. So we definitely think that we're getting a higher quality of customer through some of the TV activity than through some of those other channels. We'll talk a little bit about membership and basically the customer journey, but the retention strategy is really around not just acquiring customers, but making sure that we nurture them into order 2 and 3. So really trying to understand their behaviours and the objection handling that they're looking to in terms of consumption, and speaking to them and supporting them through that. And we've actively been talking to what we call our nursery customers, so typical customers that we've acquired in the last 90 days, to try and understand their consumption habits, and also trying to make sure that the Parsley Box is front of mind for them in terms of reorder strategy. So maybe we can just quickly show you our recent TV ad that, as I said, launched on the 1st of September, and we can come back to the presentation after that.
Who says life gets quieter after retirement?
What with taking up new hobbies
and spending time with the family, how do we fit it all in?
Our secret? Parsley Box.
Parsley Box offers delicious home-cooked style meals delivered to your door, so you can free up time for the things you love. Shop now at parsleybox.com or call our team today.
Parsley Box.
So, and another additional marketing activity to try and create lock-in with our customers is the Parsley Club. So it's basically a membership program, typically £15 per annum, where we basically try to give additional value to our customers and priority treatment. So giving them faster delivery, name day delivery, so that they can plan around their busy lifestyle, because actually they are busy. We're also giving them access to some of our new products free, so that they can try them, really treating them very differently from our core set of customers. And this is really to try and lock in our most active customers, with a target this year of roughly 10%, so 10,000 members of this club paying that £15. And we're already, it only launched at the beginning of August, but we're already on track for those types of numbers. So we're happy with the early feedback from customers, and we expect to expand the offering within Parsley Club over the next 12 months to try and, again, retain and hold those customers that we've got, that are our most loyal, most valuable customers going forward. We've also tried to extend into partnerships. So we've had a number of online partnerships, specifically Murthy, which is an online events platform, which we have sponsored part of the platform to bring events and activities to our customers free of charge. It's just another example of broadening our offering and broadening our lock-in with our customers, to broaden the things that they think of Parsley Box as a brand. And that's been very successful in the early stages of launch. In terms of product's very important to us, and it's an area that we continue to invest strongly in. We do think product innovation is one of the things that Parsley Box is very good at. We've not only relaunched a lot of our products over the last 12 months and improved quality and improved provenance, but we've also really tried to drive meal occasions. I'll talk about that a little bit. Our sticky toffee pudding won a Great Taste Award, so we're very pleased about that. And we really are trying to drive beyond the midweek meal occasion into some other categories. So really what we're trying to do is we use the customer insight to try and understand the frequency of consumption. As I said, mainly currently the core consumption occasion is during the week, and what we're trying to do is move into some later in the week and weekend occasions. So we've listened to consumers. One of the biggest things that they asked for was larger portion meals. We've worked on that and actually launched those. That has been quite successful. So typically going after the larger appetite. As Holly mentioned, we've also launched the lower price point of some of our meals to make sure that we are relevant to customers that are potentially trading down. And you have seen from us a number of occasion meal boxes at the beginning of this year, and bakery, and we're launching into some of the food gifting in preparation for Christmas. Holly.
Thanks, Kevin. So as we said, our customer base really values our contact centre. So we still have we have a team of 60 up here in Edinburgh, and their service rating is really exceptional. So Trustpilot of 4.4 has been consistent really now for a long time, and an NPS, a Net Promoter Score, consistently over 70. I mean, that's the sort of levels that First Direct get for their customer service. So the team are really doing incredibly well in servicing our customer group. 60% of the orders are placed by phone, 35% online, and 5% still by mail. For several reasons, we are going to be stopping that mail order option in Q4. Postal strikes, environment, etc., all contributory factors. We are continue to work to have very good delivery times, 2 to 3 working days. We offer free shipments for over £35, and we're trialing different carriers, like I said, to try and get that balance between fast service, good service, reliable service for our customers, and with cost. So we'll do a little bit more trialing of that on Q4 to see if we can keep our gross margin improving. On the tech side, so 35% of our orders are placed online, but our site is used by our 60 members of our contact centre all day, every day. So this year we have built a tech team, software developers who are now spending their time working out how we can build on our site to optimize it for call handling time and to help increase the ease of upsell on each time we do make a contact with a customer, either whether that's by phone or on our website. So there's been and continues to be a lot of work into this area, and we really want to make it sure it's very accessible, very user-friendly for our customer demographic. So our team has really changed over the last 12 months. On the left-hand side, we had about 120 people a year ago, majority, over 80% of those based in the contact centre. As we've seen the order volumes decline since last year, but also trying to invest for the future and future-proofing the business with different types of skill sets. What we're seeing is quite a mixed change in the skill sets within the organisation. So we're about 90 people at the moment, but you can see that real mix of different types of skills coming in from marketing, food innovation and product, as Kevin said, really focused on that product range for our customer group. We've brought in a member of the marketing team to focus purely on the new membership scheme and partnerships. And as I said, we've developed this new tech team to keep our website going for the future. So the bit where everyone skips to when you write your results, they just want to know what's happened since the results. So whilst the half year numbers did show this year-on-year decline, within that there was real consistency. The decline happened when we turned the marketing spend off, which happened in about Q4 last year. And so we've been trading around about the 1.6 million per month throughout the year, and that has continued into the second half. So the consistency is good. We are continuing to build on both the product margins through, yes, the mix of repeat and new customers, also with the type of discounting strategy that we've been going for both new customers and repeat customers. So that has been reducing this year. We are, as I said, reducing some of the lower margin products or discontinuing some of the lower margin products to keep building on that gross margin story. And we are so far completely on track with the market guidance that is out there for the 19 million revenue line and 4.1 on the EBITDA. So that will continue a 42% reduction in losses year on year. And where we're really focused is trying to balance that, continuing to invest in future sales channels, in tech, in our product. So keep those investments going whilst balancing with this journey to profitability. So that's really where we are today. And I think, Kevin, unless you want to say anything else, this concludes the formal part of the presentation. And I think we can go to questions.
Yep.
That's great. Thank you, Holly, Kevin. Thank you so much for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. Kevin, Holly, if I may, we did receive a couple of pre-submitted questions. The first one, I think you've touched around the inflationary environment, but more broadly, how are you dealing with the inflationary pressures within the current environment? Maybe you could expand on that.
Holly, do you want to answer that?
Sure. So, I mean, yeah, the main point is maintaining that in our product base. So working with our suppliers, yes, they are feeling the pressure and they have passed on some price increases to us during the year. We put our prices up in January 2022, and we have managed to maintain those prices until January 2023, which is really quite something. And we've been doing that by balancing the increase in the cost with the reduction on the discounting that we do, and managing to avoid an overall retail price increase. So that's part of it, is using the discount strategies closely this year. Other parts is by being able to build the product ahead of some of the increases that we've been experiencing. So our core suppliers do give us notice of those coming and give us the option to build ahead and bring into stock in advance of a price increase. And for those smaller suppliers where they're not able to do that, we have to just keep deciding whether this is a product that we want to continue with or not. And so those are the decisions that have been going on internally. So some of those we will discontinue, some we can sell in multi-packs if we're able to maintain those margins. And some we will take a cost price increase for a short period of time until January.
That's great, thank you. I guess as an extension to that, the follow-on question talks about consumer spending that's come under the obvious pressure, and what's your view in terms of the longevity of that? Do you see light at the end of the tunnel?
Yeah, I think I do. I mean, I think we were heading into an environment that, if you think of our consumer, a lot of them have a relatively fixed income, although they're still pretty wealthy. They will be cautious about how they spend that income, and their pensions went up at the beginning of this year by about 3%. Obviously, inflation running at around 10%, does eat into the relative spending power. Energy and food is a large part of their income or their spending, and as part of their income. So they really have been a little bit cautious. I think when we've seen some relief in terms of some government announcements around energy capping, and we've already seen going into September some positive momentum on the back of that, where I think consumers have been holding back a little bit in terms of their spending power. They're still not spending, I think, as much on large items, but certainly food, we definitely have seen some loosening of the wallet, if I would say, going into August and September, that we hope that we'll see into the winter, which is obviously a key trading period for us.
That's great. Thank you, Kevin. If I could ask you both to open up the Q&A tab, it's on the right-hand side of your screen as well. You've got a number of questions from investors today, so thank you to everybody for your engagement this afternoon. And if I may just hand back to you, if I could ask you just to read out those questions and give a response, of course, where it's appropriate to do so.
Great. So we've got a question from Steve. How have consumers reacted to the new Parsley Club, and how do you look to expand this? So I think I covered that within the presentation. It was a soft launch in August. The tech team had worked on this over the summer. We were pleasantly surprised about the uptake from a customer perspective without any real push in terms of marketing. It's been self-discovered, and we feel that the KPI of around 10,000 members, which is, as I say, around 10%, not quite 10% of our active customer base, is a realistic expectation. We have the benefit of some of our team members having run loyalty programs in the past for other retailers, and we definitely feel that that's within comparable peer group levels. So we will expand it by really trying to use those consumers to understand how we develop the product set, the service set, and other areas, and really try to make sure that they get value, and we get value not just financially from that, but as a large focus group and test bed for further product development going forward. Next question's from David. You state the average age of your customer is 74. How do you market to this demographic, as digital may not be as accessible? I think we have covered this, but just to quickly cover it off, we still believe, having done a lot of research, that our customers do purchase online. Food is one of the things that they are not overly comfortable about purchasing online, but that obviously gives us a great opportunity to become their retailer of choice in that area. We typically market to them offline, so I think I covered it. TV, prospect mail, and newspapers are the predominant method of reaching those consumers. But we are generally seeing an increase every year of sort of online adoption within this demographic, and so we do expect, and a lot of our investment is going into trying to make sure that we can attract them digitally. There is some downsides of digital channels. I think if you follow any other consumer brands, there has been a lot of flux within the market with iOS changes and algorithm changes from Facebook. So I think we're generally quite well protected from those. And although costs of acquisition has been going up steadily, we do believe that we've got some benefit of not being as digitally enabled to shield against some of those inflationary costs within some of the media markets as well. Holly, how about you taking the next one?
I can. David also, have you also reduced discounting across the product range? Good question. So overall, yes, I would say it's now really, we've segmented our customer database much more smartly. So if you're an active customer, we do incentivize through free gifts and that sort of thing. So it's a form of discount. And then if you're in a different area of the database, like you haven't ordered for a while and we're trying to encourage you to come back, there will be some discounting mechanisms to those groups of people, and also a higher discount to acquire a customer. But how much we give in discounting versus how much we spend on the media for each of those orders is sort of a balancing act. You know, you give a nice heavy discount and you get a good response rate, so your CPAs go down, but then you've just got to see the combined cost of that. Which of those leads you to a better lifetime value type of customer? So those are the sorts of tests that we've been doing in detail throughout 2022, and we are discovering actually a lower discount to start with brings you a higher lifetime value customer. So hence the idea of going back on TV where you don't typically offer discounts. So that's what you'll see much more of us in the second half of the year. But overall, year on year, yes, our discounts have come down, and yes, we will continue to do that so that we can keep that overall consumer message of a price freeze also. Thanks.
And we've got another question from Dinesh, which is, will another fundraising be required in 2023 due to the high cash burn rate?
One for me. So this is what we said in the statement still holds true, in that the company keeps under review what our capital structure and any fundraising in the next 12 months. I mean, the market is very uncertain at the moment, and 12 months is a long time right now. So all I can say is it's under continual review there. Front of mind, minimizing cash burn.
Thanks, Holly. And then the final one, given the market capital, the market cap of the business is less than 7 million, with 5 million of cash, along with the brand name of Parsley Box, which is well known, how do you protect yourself from unwanted corporate interest?
Is that for me?
Well, I think you. I can probably answer this one. I mean, the reality is that there's a number of shareholders that are significant shareholders in the business that would need to manage and be open to any of that unwanted corporate interest. It's not something that we are currently considering, and we haven't had any unwanted corporate interest that I'm aware of at this point in time. So we would obviously think we're well protected from that, but obviously our view is that we want to use that cash to continue to grow the business and grow value in the business longer term.
Yeah, I mean, our shareholder register, there's sort of 56% in our big two concert parties, so that's really the way that that's protected.
Great. Kevin, Holly, you've taken every question from investors today, so thank you once again for everybody's engagement this afternoon. Kevin, Holly, I know that investor feedback is particularly important to you and to the company, and I'll shortly redirect investors to give you their thoughts and expectations. But before doing so, I wondered if I may, Kevin, just maybe hand back to you for a few closing comments, after which I'll ask investors for their feedback.
Yeah, I just thank all our investors for attending today, and also want to thank the Parsley Box team. It's been an uncertain environment over the last 6 months, and so thank both the shareholders, the team, and our investors for all of their support over the last 6 months or so.
That's great. Thank you, Kevin, Holly, for updating investors once again. Got to please ask investors on the call not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the management team could better understand your views and expectations. It's only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Parsley Box Group PLC, we'd like to thank you for attending today's presentation. Good afternoon.